Welcome to ShortView Trading. It's your morning market hit for Monday, 9th of November. What matters today and this week for traders? Buy on the rumour, sell on the fact. There's a reason we have these market sayings, and last week is a brilliant example of that, with the market rallying into the election on Tuesday into Wednesday and then rallying throughout the week as increasingly it becomes clear that there's going to be an outcome, with that outcome pretty much announced and sealed as of yesterday, Sunday, and market rallying overnight in Asian trading hours. The other way of thinking about it, of course, is markets hedge into these events. They hedge downside risks and they unwind those hedge. And that's why our risk appetite models are so good at doing what they do at certain key moments in markets, in the market cycle. In this example, as you can see in front of you now, the risk appetite scoring system had a wonderful buy signal at the back end of the week before last, the sort of back end of October. And markets started rallying into the election result. In other words, market participants hedged in the second half of October. The market sold off. Our models went back to buy. And then they started unwinding those hedges as we moved towards the election on Tuesday and throughout last week. As you can see now, the risk appetite model is back on sell. Indeed, if you want an update of all our risk appetite and other market timing models, our 1 to 2 week models that we use to time these markets, please see today's daily rag. This is updated every day with a broad swathe of short-term market timing models and a recommendation as to what to do on a 1 to 2 week time frame on equity indices. But it's also interesting to note that as well as picking up the moves nicely in this election this time round, the models, the risk appetite scoring system, as you can see from the chart in front of you now, did exactly the same thing in 2016 when Trump was elected. Lots of fear priced in coming into the election, then a nice rally coming out of it, and the risk appetite models going from greedy back to fearful and then back to greedy over the course of the 2 or 3 weeks surrounding the election at that time. So similar sort of patterns today from our models as we saw back in 2016. So the question is, where are we now? And of course, if you look at the S&P candlestick chart in front of you now, shown with overnight price action, you'll see that we're within spitting distance of the record highs from the 2nd of September. The S&P futures are up overnight within 1% of those all-time highs from that date. And of course, with that, lots of models moving on to sell and starting to generate sell signals. Interestingly as well, bond yields holding above their 200-day moving average, backing up again on Friday. This is a key part and a key driver of the sub-segments of the market and the sectors within the marketplace. So to see how we're playing this, please see today's Daily Rag, available to subscribers via the website. So what are we watching today and this week? Well, today's pretty light, not much going on, but over the course of this week, there's various bits and pieces of key data coming out. In the States, that will include the small business survey, the NFIB business optimism, as well as some CPI data. Of course, that's key in the medium term. How does inflation play out from here? JOLTS data as well is also coming out of the States. Over in Europe, Q3 GDP, both in the UK and across the Eurozone. Whilst in Asia, we'll be focused on the total social financing data out of China, the money supply data and the lending data that all comes out at some point during this week. So that's it from us. That's your morning market hit for Monday, 9th of November. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading. Follow us on Twitter, Facebook and or LinkedIn. Thank you for listening. Stay safe. Trade well.